this is like, I hate to say once in a lifetime, because every time you say that in trading, it happens again, like 6 months.
Yeah.
It's like, oh, we're never going to see this again. And then something like that happens in 6 months.
It just started. We're 5 seconds into it, 6 seconds into it, so this is the final 60 seconds of the market. Look at the volume on the 2-minute chart. Don't focus on the MACD, don't even focus on the price action for a second. Just analyze this. Doesn't this seem obvious? Look at this. "30 seconds left before the market closes. Look at it struggling. This is so wild. This is very rare." Okay, yeah, there's the move. And we entered slightly below the purple. We're going to exit right now and take a little bit of profit there. There is 10 seconds left, 9 seconds, 8 seconds left. Look at the volume piling in. MACD momentum is continuing at a nice symmetrical. And that's the end of the market right there. Closed. Very rare that we didn't get large volatility, large candles in the last minute. That's very rare. Wow. We're going to go over, we're going to look at how many times the strategy came into effect today. And when market was about to open, we had some downward bias on our 30-minute chart. This is right before the market opens, right here on this blue line. So we had a little bit of downward bias on the 30. On the 2-hour, we have even more downward bias right before the market opens. And then let us never forget, it's always great to check the histogram momentum on the MACD on a daily chart. You pull up the daily chart, you look at the histogram of the daily chart. What is it telling you, right? This is momentum. It's just a probability. Just think about momentum as probability. Don't think of it as like a force in physics. Don't think of it as some sort of psychic or psychological. No. Momentum is just translated to probability in your own mind. So we've got some downward tapering the past 4 days. Okay? So we've got a downward bias on how many levels? All of our higher levels have a downward bias. Okay? Keep that in mind. That's the pre-market. And then, of course, like always, you want to set your critical levels. You want to set your previous day low, pre-market low, then you want to set your pre-market high, your previous day high. And a very good one to set, these purple lines are the previous week's critical levels, highs and lows. Okay, let's see if the strategy made any money today. We have a market open. What did we say about our bias? We have a lot of bias to the downside. What did we say? Right before the market opens, okay? We're predicting the future before the market opens. We're saying, wow, we've got a lot of downward selling pressure. Okay? Look what's about to happen. Okay, it's more money than a full-time job in one day. And we've got an open right here, and then we look at this because we want this to now align to the downside with our 5-minute data. If we can get that to happen, we've got a good trade. So on this point right here, what do we see? We're now moving to the downside on the histogram. We've got a volume bar greater than the previous 3. 5-minute is not expanding, so this is an improper trade. This is not a good trade because our 5-minute is sort of expanding, not really. It popped up here. That's not good. We want it to be coming down. You can take this trade if you'd like. It's just a higher risk. You would enter here at the close of that candle. You would put your stop loss slightly above that candle somewhere. You would target a 1-to-1, and that would have been a win. The next setup that occurs is right here. Look at the 2-minute histogram. This is momentum, remember. So the momentum comes up, starts ticking down just a little bit, but look what happens. We get a volume bar greater than the previous 3. We are aligned, sort of, yet again. It's not as clean as we would like. So this is another improper trade, right? This is a higher risk trade. So you would enter right here at the close of that candle right there. Put your stop loss somewhere above it. Target a 1-to-1. And you would have ended up making way more than what you would have hoped for. So that's a tremendous trade that happened right there. I did capture that one. We did capture that one today. And then we have this setup right here. Look at this fat candle. We are on the right side of the 2-minute momentum. Our 5-minute histogram has not finished yet. This is a high-risk, improper trade. Not beautiful, not proper. It's improper. Higher risk. It's dirty. You would enter here at the close of the candle. You would put your stop loss somewhere above this candle, and then you would target a 1-to-1, and you would have got the win. That's 3 wins so far on the day. Now, by the time we get to this point, the 5-minute histogram has now flipped to the upside. We now have confirmation at this very point. What do we see here? What do you see right here on this candle? Do you see anything interesting? Look at this. This volume bar, greater than the previous 3. We're now on the right side of the momentum. You would enter at the close of that candle. You would put your stop loss somewhere beyond that one, or if it's too tiny, if it's a small candle, then you could target the previous candle and use that as your stop loss. A little bit beyond that one. You would target a 1-to-1, and you would have made way more than that. You would have made 3 or 4 R on that trade. 3 or 4 times the amount that you're hoping for. We go to this right here. Look what happens here. 5-minute made that move. That's what this upward move was here, was this trade that we just talked about. And then it starts tapering down. Look at the 5-minute histogram telling you about momentum. 5-minute momentum. Tapering down. Tapering down. Finally gets a crossover right here. When that crossover occurs, we wait until we get some sort of volume confluence and alignment on the 2-minute chart. The crossover occurred right here. Literally right here on this bar. And then the next one. And then the next one confirms it. See the confirmation. Now it's finished. It's printed. So, by that point, by the time this happens, you know, we're already overextended here. We've been going for a while here. You could have entered here a little bit prematurely, but that's not proper. If you want to wait for a proper setup, you got to wait for this to print. You got to wait for the crossover to happen. And then we wait for a volume confluence and an alignment on the 2-minute data right here. That is what we get on this red line. This red line right here, this candle. This MACD starts to actually pop up, even though it's very hard to tell. It's small. We're talking about very minute differences, you know? And we get a volume confluence, one volume bar greater than the previous 3. So you would enter on this candle. On the close of that candle, you would put your stop loss somewhere above it, target a 1-to-1, and you would get the target. Absolutely, you would get the target. And let's move to the final trade of the day, the final setup of the day. I took this one early. I entered early because everything was looking good and my intuition was telling me to do it, and my discretion was telling me to do it. So I entered right here on this first red bar, which is early. It's not correct. It's premature entry. The correct entry is right here on this fat bar because we get a volume confluence. The volume confluence on my entry, I entered slightly early. Yes, I had a volume confluence. Yes, we were on the right side of the momentum. But look, this bar hadn't concluded yet. You see? The crossover, that red bar had not concluded yet. What does that mean? That means this is an early entry. This is a higher risk setup. And had you waited for the proper entry, now this bar has concluded. We get another volume confluence, a volume bar greater than the previous 3. Your entry would have been here at the close of that candle. You would have put your stop loss slightly above that candle. You would have targeted a 1-to-1 with this candle. And it could have sort of, no, not really, no. The 1-to-1 would have been like a little bit lower around here. So this one would have been technically a loss had you entered at the proper entry. And had you taken the premature intuition, sort of going with your gut feeling entry, then yes, it would have been a large win. Would have been like a 2R win. So that was all the setups from today. I hope you're doing well. And oh, one more thing we got to cover. This is the daily chart for a bunch of marijuana cannabis stocks. Notice how they've all popped up. And we're talking huge pops. I mean, 30%, 50%. The reason this is happening is because there's a high potential of an executive order being signed next week. And that executive order would completely change the cannabis industry forever. We need to be paying attention to that.